Hello and welcome to Mines and Money in Hong Kong. I'm speaking with Darren Townsend, the Managing Director for Peak Resources. Welcome, Darren.
Hi John, how are you going?
Good, thank you. First of all, the recent PFS on the Nagala Rare Earths project in Tanzania delivered low underlying capital costs. Can you please also take investors through some of the other highlights?
Yeah, you're right, John. We did have very low capital costs of only $367 million, which included a 30% contingency, which is low for a project of this type of rare earth production. A number of the other highlights. We had an NPV of just over $1 billion US. It's a 58-year mine life. Internal rate of return after tax of 39%. So some really good numbers. The thing I really like about the project is there's about $121 million a year over the 58 years of free cash after tax and royalties. So that's a pretty attractive financial.
How does the composition of the Nagala resource compare to others globally?
Yeah, we've got a very good bastnasite deposit, very high grade. It's the first 20 years, I think, of mining, it runs at about 5.2%, which is very high grade. We are what's traditionally called a light rare earth project, but it's a bit of a misnomer in that we have some very high value light rare earths, and it's all really about value. And the big advantage we have is about 71% of our revenue is from the higher value neodymium and praseodymium. So they're all driven off magnet usage, and we see magnet usage going forward as a very strong demand growth. So we're very happy to have that favourable composition.
The initial mine life is 58 years. How would the economics change at a greater production rate?
Yeah, we could look to do a scale up. We thought 10,000 tonnes per year of final separated rare earth production, which is post a solvent extraction plant, was a good way to enter the market without getting too big. But the deposit, as you can see, with a 58-year mine life, does have a lot of ability to scale up. And we could easily see an opportunity to scale up to 20 to 30,000 tonne per annum if the market desired it. And obviously you get some economies of scale if you did a scale up. So pro rata wise, your capital costs will increase at a slower amount versus your production, and obviously your operating costs will come down from the already low $11.74 a kilo.
Following the maiden ore reserve, what are the next milestones Peak is targeting?
Really, the stage now that we've finished the pre-feasibility study is to head into feasibility study in the not too distant future. And the main focus, these plants are really about chemicals and processing. So we'll be putting a lot more energy into pilot planting. We've already done a bit of pilot plant work in producing separated rare earth products in Australia. So we're one of the few that have taken it all the way through to separated rare earths. What we want to do is build upon that, get ourselves some bigger samples so we can really start engaging on the marketing side. And really that's the key going forward, is to work with the end users and work with the customers. So that'll be very important, and in parallel with that we'll be progressing our discussions with looking at strategic partners. We've already got a memorandum of understanding with a Chinese group. We'll be continuing on with those discussions, and we've also recently been getting a lot of interest from the Middle East. So we'll be progressing all of those things in parallel.
Finally, Darren, why should someone consider an investment in Peak?
I think it's just the quality of the resource. It's such a large, long-life resource. Obviously, you've seen those large, long-life free cash flows, very attractive cash flow potential, and we think the future of these sort of strategic minerals is very strong. The world's going to need more and more of these magnets and high-tech applications, and we look forward to being part of that supply.
Thank you very much, Darren, for joining us at Mines and Money in Hong Kong.
No worries, John. Thanks for your time.